Imagine a group of men meeting in secret, cloaked in silence, shaping the financial future of a nation not from the halls of Congress or the offices of presidents, but from dimly lit rooms, private clubs, and unmarked buildings just steps from where Wall Street stands today. This isn't the plot of a thriller novel or a conspiracy film. It's history, buried under centuries of myth, misdirection, and deliberate secrecy. At the heart of America's financial empire lies a story few dare to tell. The rise of a clandestine network so powerful, so influential, that it didn't just participate in the birth of Wall Street. It engineered it. These weren't just bankers or traders. They were architects of a new economic order, operating in the shadows long before the New York Stock Exchange existed, long before ticker tape and televised market updates turned finance into theater. Their tools weren't just ledgers and loans. They wielded secrecy, loyalty, and a shared vision of a world where money moved not by the whims of kings, but by the quiet consensus of a chosen few. To understand Wall Street today, the volatility, the inequality, the sense that someone, somewhere, is always pulling strings, you must go back to the late 1700s and early 1800s when the United States was still a fragile experiment. And a small circle of men decided that the new republic's survival depended not on democracy alone, but on a financial system controlled by those who understood its deepest mechanics. It began with Alexander Hamilton, a man often credited as the father of American finance, but whose legacy is far more complex than textbooks suggest. Appointed the first Secretary of the Treasury in 1789, Hamilton didn't just propose a national bank. He built the scaffolding for a financial elite that would operate with astonishing autonomy. But Hamilton didn't work alone. He was part of a loose but deeply interconnected web of merchants, former military officers, and financiers who shared Enlightenment ideals, but also a deep skepticism of pure democracy. They believed that only those with property, education, and, crucially, insider knowledge should steward the nation's wealth. After the Revolutionary War, the U.S. was drowning in debt, its currency nearly worthless, its states fractious and broke. Hamilton's solution? The Bank of the United States, chartered in 1791. But here's what most histories skip. The bank wasn't just a government institution. It was privately owned, with its shares sold to a select group of insiders. And many of those early shareholders were already part of an exclusive social and financial network centered in New York and Philadelphia. They met not in public forums, but in private dining societies, Masonic lodges, and merchant counting houses where deals were sealed with a handshake and never written down. Among them were names now etched in marble on skyscrapers, the Roosevelts, the Livingstons, the Jays, but also lesser-known figures like Nicholas Lowe, a real estate speculator, and William Seton, the first cashier of the Bank of New York. These men weren't merely investors. They were collaborators in a grand experiment to create a financial system so resilient, so centralized, that it could outlast political upheaval. And they understood something radical for their time. That perception was as valuable as gold. If people believed the system was sound, it would be, even if the vaults were half empty. This principle, confidence as currency, became the bedrock of Wall Street. But how did this inner circle maintain control as the nation grew? The answer lies in Society for Establishing Useful Manufactures, or SUM, founded in 1791 with Hamilton's backing. On paper, SUM was a corporation to industrialize America. In practice, it was a vehicle for channeling capital into projects that would enrich the same men who controlled the banks. More importantly, it created a template. Public missions funded by private capital, steered by insiders who blurred the line between public service and personal profit. Fast forward to the 1810s and 1820s, and the real engine of secrecy emerges. The private banking houses. Firms like J&T, H, Perkins in Boston, and, crucially, the progenitors of what would become J.P. Morgan and Company didn't advertise. They didn't have branches. They operated through personal relationships, family ties, and letters sealed with wax. To do business with them, you needed an introduction, proof you belonged to the right world. This exclusivity wasn't snobbery. It was risk management. In a world without credit scores or regulatory oversight, trust was the only collateral that mattered. And trust was cultivated in spaces closed to the public. The Union Club, the Knickerbocker Club, the exclusive dinners at Delmonico's where deals worth millions were discussed over turtle soup. But perhaps the most enduring symbol of this hidden society isn't a person or a bank. It's a place. 55 Wall Street. Originally the Merchant Exchange, then the headquarters of the Bank of New York, this neoclassical fortress wasn't just an office building. It was a temple of finance, designed to convey permanence, order, and divine right. Inside, decisions were made that shaped railroads, wars, and the very geography of American industry. And who occupied those offices? Not just executives, but members of the same intermarried, Ivy-educated cohort that had dominated since Hamilton's day. By the mid-1800s, this network had evolved into what historians call the Eastern Establishment, a term that barely captures its cohesion. These men funded the Civil War through bond issues that enriched their own firms, orchestrated the consolidation of the railroads, and, most crucially, ensured that financial power remained concentrated in New York. Even as the country expanded westward, Wall Street's gravitational pull only intensified. The Panic of 1873, the Panic of 1893, the Panic of 1907. Each crisis revealed the same truth. When the system wobbled, a handful of men stepped in not as saviors of the public, but as protectors of the financial order they had built. J.P. Morgan's famous all-night meeting in his private library during the 1907 panic wasn't just heroism. It was the ultimate expression of private power overriding public institutions. There was no Federal Reserve yet, so Morgan and his circle decided who would live and who would die in the financial world, over cigars and brandy. The creation of the Federal Reserve in 1913 was supposed to end this kind of ad hoc control. But look closer. The Fed structure, with its regional banks and private board members, was itself a compromise brokered by the same Wall Street elite who wanted oversight without accountability. Even the Fed's headquarters, built decades later, sit symbolically close to Wall Street, not Washington. And the society didn't vanish with modernity. In the 20th century, its members adapted. They moved from private banks to investment firms, from railroads to oil, from oil to tech. They founded think tanks like the Council on Foreign Relations in 1921, not as academic exercises, but as private salons where business, government, and media leaders could line strategy away from public scrutiny. The Ivy League pipelines grew stronger. Skull and Bones at Yale, the Purcellian Club at Harvard, these weren't just fraternities. They were feeder systems for the financial and political elite. The names changed, Rockefellers, Morgans, Warburgs, but the playbook remained. Consolidate power quietly, speak in code, and let the public believe the market is a natural force, not a human construct. Even the language of finance became a barrier. Terms like securitization, quantitative easing, or collateralized debt obligations aren't just jargon. They're modern incantations that obscure who's really in control. And control is the point. Because the secret society, never formally named, never officially acknowledged, was never about ideology. It wasn't capitalist or socialist in any pure sense. It was about stewardship, the belief that complex systems require expert management, and that democracy, left unchecked, leads to chaos. That's why its members often support both political parties, not out of bipartisanship, but because they understand that power is safest when it floats above the political fray. Consider the 2008 financial crisis. When Lehman Brothers fell, who was called to the White House? Not community bankers or economists from state colleges, but the CEOs of Goldman Sachs, J.P. Morgan Chase, and Morgan Stanley, men who had summered together in the Hamptons, who sat on the same boards, who shared the same worldview. Their rescue plan, crafted in secret, saved their institutions while millions lost homes. The public called it a bailout. Insiders called it necessary maintenance. And that's the legacy of society that built Wall Street. A system where crises are not failures, but opportunities to consolidate power further. But here's the twist. This society isn't all powerful. It's human. It makes mistakes. Its members feud. Some, like J.P. Morgan himself, genuinely believed they were serving the nation. Others were purely self-interested. And over time, cracks have appeared. The rise of fintech, the decentralization promised by blockchain, the growing public distrust of institutions, all threaten the old model. Yet the society adapts. Today's Wall Street isn't just about old money families. It's about algorithmic traders, hedge fund billionaires, and private equity titans who operate with even greater opacity. They don't need clubs or lodges. They have encrypted messages, offshore trusts, and private jets. But the core principle endures. Keep the machinery hidden, and the public will blame the market, not the mechanics. So, why does this history matter? Because understanding that Wall Street was built by design, not destiny, changes everything. It means the system isn't immutable. It can be reformed, redirected, even rebuilt, because it was built once by a small group of determined people, and it can be reshaped by another. The secret society didn't win by being smarter. It won by being organized, patient, and willing to operate in the shadows while others slept. And if there's one lesson their story teaches, it's this. Power concedes nothing without demand, but it fears nothing more than light. The real secret isn't who built Wall Street. It's that they never stopped building it, one quiet deal at a time. And the most radical act today might not be to tear it down, but to simply pull back the curtain and show the world how the levers really move. Because once you see the strings, you realize you can pull them too.